Let's do what we call money flow, which is I wouldn't say the most influential oscillator in market cipher B is one of the most influential oscillators. When I say influential, it means price tend to respond towards the very direction of money flow, and as the name suggests, money flow is just liquid. It's like a vehicle with gas in it. So if you don't have gas in it, the vehicle cannot move. Technically, if you don't have, but if you do, it does. So in trading, we have various elements and various varieties of oscillators that influence the very direction of price, and money flow is one of them. So how money flow works is basically anytime there is a massive money backing an asset, obviously price tends to rise. This is just a normal logical sense. Price tends to rise in accordance with the very direction of money flow. So when you see money exiting an asset, it means price drops. So this is a big difference between market cipher A and market cipher B. Market cipher A is basically signals. Market cipher B are waves and oscillators. They move all the time. They just move all the time. So anytime money is exiting an asset, price is affected. So you realize that price responds massively towards the direction of money flow. Again, this is one variety of an oscillator in market cipher B. So imagine having massive oscillators moving towards the same direction, then price will be affected hugely. So there's a big difference between movement and signals. Signals are just like your road signs, just like your road sign. There's a big difference between road signs and your Google map. Like there's a huge difference. Like there's no way you can compare your Google map to your road signs. Sorry, your road signs to your Google map, because what Google Maps does, it gives you real-time empirical data pertaining to a given journey, so you can navigate your way around if you are using your map as your reference script of traveling. Same way refers to when you're using oscillators as your reference script of trading. You understand? So money flow is more or less like anytime money enters an asset, price goes up. Anytime money exits, price goes down. And these are the basic price action movements, upwards and downwards. And the third one is consolidation. This is whereby money is either going down. It's like this is the hardest part to trade when price is in consolidation, especially happens on weekends. And yeah, this is basically the liquid. I called it the liquid. Oh my gosh. And this is a simplified script. Market Cipher is a simplified script, and I do have a course along the line. I will deal with every element, touch every element, and I really don't want to take much of your time when it comes to explaining stuff like that. I always want to use relatable words so that everybody, including amateurs, can understand how trading works using Market Cipher. It's just a simplified script. Once you get a whole concept of Market Cipher, you don't have a problem anymore. It's just, it looks very sophisticated in the eyes, but it's not once you understand how the script works. And I've done a detailed explanation, a very simplified, detailed explanation in my course. It's still in the pipeline. I keep reminding you guys all the time, but I'm still working on it. Almost done, almost there, because I want it to be simple. So sometimes I look at it and I tweak it, I change certain things, and I'm trying to use words that makes it very relatable. I don't really use much jargons that keeps people away from trading. I just have to use just simple words, relatable words, so that people can appreciate how trading works using Market Cipher script as a reference to. Until then, have a nice time.